Hello and welcome back to the channel everyone. This video is going to be about analyzing Ruchira Papers, a company suggested by Nikhil Iyer, and a video created by me earlier to analyze Rights India Limited. I'll be dropping the link to Rights here above. Ruchira Papers manufactures and markets different grades of kraft paper and writing and printing paper. The company built a strong presence, extensive reach, and leadership position in North India, where a majority of its products are distributed. The company's writing and printing paper is used in notebooks, writing materials, wedding cards, shade cards, coloring books, and bill books. During the year under review, the company expanded its presence in the writing and printing segment by expanding, marketing, and stabilizing three new products: Leher and Neer, a type of cup stock paper to manufacture disposable cups, and Mogra, a premium paper variety crafted for wedding cards, invitations, and announcements. These additions to the company's product portfolio are expected to address unique market needs. The company's copier paper has gained widespread adoption among commercial offices and copying service providers. The company's kraft paper is widely utilized in the packaging industry, especially for the production of corrugated boxes, composite cans, fiber drums, textile cones, ream wrappers, food packaging, and various other packaging applications. Ruchira Paper is available at a market cap of 407 crore with no pledge and a debt of 44.3 crore on its book. The company is trading at a price-to-earning multiple of 8, which is at par with the industry PE at around 9. The company is available at a price-to-book of 0.98, which means that the value of all assets owned by the company less the liabilities is lower than the traded market value of 136 as at recording at 22nd June 2024. The dividend yield of the company currently stands at 3.67%, even with a reasonable dividend payout of 30% of profits. The market cap of the company is 50% of FY23 sales and 61% of FY24 sales, which indicates high level of margin of safety. Do let me know in the comment section what you think about this. The company has an ROE of 12.4% and ROCE of 15.8%, which are both indicative of strong financial performance. The higher ROCE compared to ROE suggests that the company is generating good returns, not just on the equity provided by shareholders, but also on the overall capital employed, including debt. This means the company is effectively leveraging its borrowed funds to enhance profitability. These figures together imply that the company is well managed with good utilization of both equity and overall capital to generate substantial returns. The debt to equity of the company stands at 0.11, which indicates that the company is operating with very little debt compared to its equity. This conservative capital structure indicates low financial leverage and risk, suggesting that the company is financially stable and has a strong equity base. This can be advantageous in terms of financial flexibility and lower interest expenses, but it may also imply that the company is not fully utilizing the potential benefits of leveraging debt for growth. I, for one, believe that low debt gives company flexibility in times of uncertainty and gives company enough wiggle room to come out of tough situations. We have all seen what has happened during COVID. A lot of companies had made this projection, that projection, taken a lot of debt on their books, but when it came to really repaying those debt, when it came to the tough times, they were not able to do it and the business had to shut down. The primary case study on this is restaurants. Restaurants had a huge case of shutting down, and we had heard all over the news some of the other restaurants getting shut down, whether it's in the US, UK, or even within India. Coming back to Ruchira Papers Limited, the company has a reserve of 384 crore as at FY24, which gives it a reserve to market cap ratio of 94%, which indicates that the company has a robust reserve position relative to its market value. This suggests strong financial health, potential undervaluation by the market, and a conservative approach to financial management. Investors might view the company as financially stable and potentially undervalued, making it an attractive investment opportunity. I am not SEBI registered, and neither is it a stock recommendation, so please do your own research before investing in any of the companies that I bring a video on. Now let's look at some of the key strengths and risks for the stock. Very essential to analyze these while making a potential investment return or including a stock as a part of your portfolio. The total operating income of the company grew year on year by 31% to 804.4 crore in FY23, driven by increase in revenue contribution by writing and printing paper segment from 48% in FY22 to 61% in FY23 as a result of 48.22% increase in realization price of writing and printing papers in FY23 compared to FY22. The PAT margin of the company improved to 8.41%, which is very thin in terms of a PAT margin. The increase in net sales realization in writing and printing paper as a result of high pent-up demand and supply disruption caused by Russia-Ukraine war and increase in waste paper prices. Although the raw material prices have started tapering down, the moderation in net sales realization has been modest, resulting in better profitability margins for Ruchira Papers Limited. The financial risk profile of the company remains comfortable with overall gearing of 0.11x as on March 31, 2023. The improvement in gearing compared to FY22, where the gearing ratio was 0.21, is mainly on account of scheduled repayment of term loans coupled with accretion of profits to net worth. The debt profile of the company as on March 31, 2023 comprised of term loans to the tune of 6.92 crore and working capital borrowings to the tune of 34.95 crore out of a sanctioned limit of 34.95 crore. Debt coverage indicators of the company also improved and stood comfortable with profit before interest, lease, depreciation and tax coverage of 22 times. Incorporated in 1980, the company has an established track record of operations of more than 4 decades. Further, the company has a country-wide marketing and distribution network to sell both craft paper and writing and printing paper segment. Moreover, no customer of company contributed more than 10% of the company's total revenue in FY23. As per a ICRA report, the paper industry is witnessing a paradigm shift from the demand perspective, with demand for newsprint papers and printing writing papers dwindling. Also, a plastic ban, because of which within the packaging industry, a lot of packaging which is being done or sent out, you would see is shifting from polythene-based packaging to paper-based packaging, and Ruchira Papers is set to benefit from that. Some of the key risks while looking at Ruchira Papers Limited is the operating cycle of the company, which is intensive at 71 days in FY23, primarily on account of higher inventory holding days of 47 days. Ruchira Papers Limited is required to maintain adequate inventory, mainly in the form of raw material, to ensure smooth execution of production as well as maintain stock of finished products in order to meet the immediate needs of its customers. The company offers a credit period of around 50 days to 60 days to its customers. That's a lot. The operating cycle of a company is a key indicator of its efficiency in managing inventory, receivables and payables. A longer operating cycle can tie up more capital in working capital, potentially leading to cash flow issues. The paper industry is highly fragmented in nature with stiff competition from a large number of organized as well as unorganized players. This limits the pricing power of the manufacturers and puts further pressure on profitability. Also, the industry is impacted by economic cycles. Other than waste paper, Ruchira Papers Limited also uses agro-based raw material, which is purchased from the domestic markets. With respect to the agro-based raw materials, there are limitations in their use due to seasonal availability, leading to high volatility in their prices. Therefore, the operating profitability of the company remains highly susceptible to any volatility in raw material prices. That's it from my side in this edition of analyzing stocks listed in the Indian stock market. Do hit the like, share and subscribe icon to stay updated to the latest on this channel. Until next time, goodbye.